Hello, this is Brian Resney, President of Resney Wealth Management. It's question and answer day, and one of the questions that continuously comes up on my TV and radio show is really about ETFs or exchange traded funds. ETFs basically are a basket of securities. It owns the physical security, whatever that may be, of any asset category or indice and tries to benchmark that indice. As an example, if you were an investor and you wanted to own physical gold, you could actually buy the GLD, which is an ETF that owns physical gold stored in a vault and actually is insured and protected. You don't have to actually go out and buy physical gold, hold the big heavy bars and insure it yourself and protect it. You can buy the GLD, which I firmly believe is one of the best ways if you want to buy gold as a position in your portfolio. Currently, though, gold is weak and I would not touch gold. In fact, it's still in a severe downtrend and I would avoid gold at all cost. We haven't owned gold since the end of 2012, and our clients were glad that we sold gold at the end of 2012 because they avoided that big 30% downward draft that was in gold. But again, a great way to buy gold would be an ETF if it was appropriate and the right time. You can also buy pretty much any investment, whether it's real estate, whether it's small cap stocks, whether it's emerging market, whether it's commodity based or anything in the middle on ETFs. Why do we like ETFs or exchange traded funds? Simple. They're often about 1/10 of the annual cost structure of a mutual fund. They don't carry all the conflicts of interest of mutual funds. And often, most mutual funds, about 80% ranked by Morningstar over a rolling 5-year time frame, don't outperform the base index. So if they can't outperform the base index, why would you want to own them with their high cost structure and low performance? You wouldn't. But brokers, broker-dealers, banks, and insurance agents love to sell mutual funds because it's better for their pocket than for yours. We prefer at Resney Wealth Management to use ETFs. We can be well diversified at an extremely low cost, easy to trade, easy to protect our clients, and easy to look at any asset category around the world and encompass that in our client portfolios if necessary. So if you are not utilizing ETFs for most of your portfolio, why is the question? Chances are you're probably working with a brokerage firm, a Wall Street company, bank, or insurance company whose interests are different than yours, and they're more interested to collect commissions and trail commissions versus what's doing best for your portfolios. ETFs, in our opinion, are far superior over most mutual funds for the client benefit, for your return, and more importantly, for your retirement. If you're not a client of our firm, call us for a consultation. There is a difference. You can basically participate on the upside while protecting the downside. We firmly believe risk management is an important part of money management, and our clients enjoy participation and, more importantly, risk management in severe down markets. Call our firm today for a consultation. There is a difference. We invite you to experience it.